Happy Wednesday. Welcome back to the final hour. It is 3 p.m. on the 22nd. The markets continue to march higher with gaps and drifts. Not a lot of intraday movement. We actually gapped up. I'm looking at the SPY just under the 603 handle. We're trading at 607.52 right now, with possibly a poke into the 608 to 610 region. I'd shared out something with my double up alert service. I'm looking for a market maker defense level around the 610, possibly some profit taking, maybe a poke at the all-time highs. If we can't sustain that close or close above it, then maybe a bit of resistance coming in. So here we are on the SPX, just a whisker away from these all-time highs, but a little cautious, I would say, for this reason. We've got a gap, we've got a gap, we've got a gap, and we've got a gap. So how we got there is pretty interesting. I could 100% see this happening. If we have a high, low, and an equal high, or even a slightly higher high, let me put together one of my other workspaces here. So I'm going to go harmonics and pivots, and let's take a look at some momentum oscillators and relative strength. So let's go to SPX right here. Okay. So this is a daily time frame, and we have a reasonable bar count since we've hit the 200 moving average. The one thing I'd say I'm a little concerned with on the daily and weekly, and I'll go to both, would be the fact that we had highs here and we are nearing the same highs, but you can see that the momentum is not quite there, and the relative strength is also not quite there. To me, that looks like hidden bearish divergence. Doesn't mean that that is the top, but it certainly can mean in anticipation of a top. Here's another one on the weekly time frame. Again, market can do whatever it wants. That's never, my thing, never my control. I'm not really interested in calling tops and bottoms. But I will say, since we have stretched on the weekly time frame, overbought conditions with divergence, I would say even this high right here, if we poke that high from a technical standpoint, there is some really good hidden bearish divergence on the relative strength. So I don't think we sustain these highs. Just my thoughts. Daily, weekly on SPX. Let's go to the NASDAQ. Take a look at the same thing here. So move this down. NASDAQ has a bit of positive momentum. I do wonder, though, if we get up to some fresh highs, or looking at this relative strength, same type of thing. High in price, if we hit the same high or hit a slightly higher high, do we start to see a decline from there? So I don't know. What could be the derailer? Maybe PCE at the end of the month, maybe the Fed at the end of the month. I don't know. Why would the Fed say something that would get a big reaction as far as bullish or bearish? I mean, the Fed's probably not going to want to say anything to really rock the boat, but they could have a similar tone to what I'm saying, they, like Jerome Powell. If they have a similar tone to what they had in December, they could still be talking about inflation, which is printing higher. PCE is coming 2 days after the Fed. So next week on Wednesday, we have the FOMC expected to pause. Here's the watch tool. And 99.5%. I'd say it's pretty safe to say we're looking at a pause. Going into, there is no February FOMC rate decision. It's going to be now until March, and then May, then June. I still look at probabilities. Nothing has shifted from what I can see on the watch tool. The one rate cut may be coming in June of this year. And after that, maybe the closest rate cut for a second one would be the end of the year towards October or December. That's still not highly probable, though. The highest probability is a pause after one cut coming in June. So the expectations have shifted quite a bit. I think the other factor that plays into, how much higher, how much longer can this market go to the upside? We have to watch the dollar and the 10-year yield. All right. So, like I said, I'm a little skeptical how we got there for this reason. Got lots of gaps, lots of gaps, lots of gaps. So we've got 3 or 4 gaps in the last 8 days of trading. And on top of that, if we get to these highs, I do see a lot of divergence. where price and momentum disagree between momentum oscillator and relative strength. A couple of indicators that I'd be watching pretty closely. Also, we really haven't had a pullback. Let me go to the weekly time frame. We haven't had much of a pullback outside. This is a 21 moving average on the weekly time frame. Okay. So our last real correction that we had, this is pretty wild. The last correction we had on the weekly time frame back down to the 200 moving average was literally the COVID crash, the 2018 vol event, which is a broadening pattern. So we had that move in 2018, and then we blew that up through 2019 to 2020. And the last time we tested that, I mean, if you're looking for an opportunity to buy long term, my gosh, I mean, look at the weekly time frame and find the 200 moving average, and you have yourself a fantastic buying opportunity. But it's not without time and pain if we do have a correction. So how far away are we from that 200 moving average? I think this would kind of rock traders' worlds right now. If we had a move back to it, that's a 24% correction to find the weekly 200 moving average. I mean, that's obviously noteworthy. And market-wise, look at how many bars we stretched since our COVID push. So we tested back here in 2016. 2016 to retest took about 148 weeks. Okay, from there to there, it took about 67 weeks. From there to there, took about 114 to 130 weeks. And from current price, we're sitting around 120. So I don't know. I'm not saying we're coming back to the 200 moving average, but my gosh, I mean, we have seen a lot of retests, a lot of retests of it since the bottom in 2008, 9, 10. I'm curious how many weeks this was from our 2011. That's 223 bars. That'd be a long recovery market. So anyway, I'm just going to make a note of this. Like, my gosh, 24% downside if we had a correction to the 200 moving average on the weekly. And this market would be just operating in continued like bull markets, bull bubbles, bear markets, bear bubbles. I guess there's not really a bear bubble unless the market just crashes, but bull bubbles. That's what we kind of are at right now. The market's broadening out a little bit. I mean, if we go into the sectors and see how they're performing so far, let's go year to date. So the S&P is up 2.85%. We're still led by energy. I couldn't get my material holdings to pop up today. So S&P is up 2.85. Energy still up. Financials doing pretty well. Industrials, materials. I did look at some of these sector plays, and then I wanted to run through. I posted this in my Telegram today. Happy Wednesday. And if you're watching this live, go ahead and type in a wire. Yes, I want to make sure I'm pushing this on my respective channels. This should be on my YouTube channel, which is Chris Pulver, youtube.com/Chris Pulver. I'm also pushing this out on youtube.com/Financial Wars, as well as Facebook and Twitter and LinkedIn. So if anybody's watching this live, drop in a comment. I should be able to catch comments on YouTube and Facebook from any different platform. So let me know. The only sector that's down so far this year is consumer staples. That is not necessarily something I want to jump into, but I will take a look. Oops, XLP. There's consumer staples. I'd like to see if we can drop a little bit further before I start getting, some sector exposure, something like that. Either $70 to $66 zone. Something in this ballpark right in here. If it gets bad enough. Okay, very nice. Hey, Terrence, how are you? Sam, how are you? Donna's here. Omar's here. Evan and Kyle will just pop in and say hi. So quiet when I start these sessions. All right, nice to see everybody. Okay, so just a quick top down into the sectors. I'm in the communication services sector right now. I think XLC has some Netflix in it. I think it does. Does it? Yes, Netflix, which had a huge gain this week. Netflix is trading. I think where's it at right now? It's like 970. Netflix is at 954. Oh, snap. We are pulling back a little bit on Netflix. All right, I need some more time. Put in an earnings trade that expires on Friday. Right now, there's about a 13% chance this trade to be threatened. 87% chance of profit right now. It's outside the expected move for Friday expiration. I'm showing a 475 credit. I'm trying to put in a 490 credit. Let me see if I can get filled. 460, 465. This will be hopefully better by tomorrow. It's not going to be a losing trade. I still have $5 of real value in the trade by Friday's close. So I'm not going to I'm not going to sacrifice the 10. I'll say 40 cents right now. If I sacrifice the 40 cents, my win's like $180 versus $225 per contract. So I'll give it some more time. Hopefully, we don't have just like a pop to the upside on Netflix and then it crashes all the way back into. If it crashes all the way back into the earnings gap, that'd be back down to like 870. But even if we pulled back to previous highs, that's still around 940. So I could see that the 920 is still safe. That's a trade that I took. There's my 915, my 920. For a $5 wide, I only paid like $1.60 for that, $1.70 for that. My net debit on the two trades I traded at long and for bullish and bearish trades, I paid 275. So my max profit would be 225 if I get one trade to hit full $5 credit. Okay. So we did have a big move. I mean, the expected move is about 10%. I calculated that out, and we jumped up about 15%. So right there, we had a pop and top around 15.25%. We're fading a little bit. We do have some earnings this week. Let me see if I can find them. Here we go. So here's some notable earnings. Most traded stocks by earnings date, which I kind of like keeping an eye on this one. That would go. Let's take us into today before the close or Thursday. Any noteworthy stocks here? I'm in Johnson and Johnson, Procter and Gamble. Some of these are defensives. There's a lot of what am I saying? Financials. There's still financials this week. Verizon, American Express. I was looking at both of those this week. AT&T is on Monday. I don't know if I have any exposure on AT&T. I think I closed out some of the cash secured puts from last year. I did. So I don't have any AT&T except for some cash secured puts. I got a 20 and a 17 out to June of this year, and I still have just a couple of shares left, and that's totally fine. All right, so that's AT&T. Let me go back to this screenshot here. Boeing, this will be one to watch. I'll highlight this for next week. So Boeing, Starbucks, LMT, that would be Lockheed Martin. RTX, that would be Raytheon, I think. RCL is Royal Caribbean. General Motors. KMB is that Kimberly-Clark? That's a consumer staple. So this little strip for Tuesday's earnings, I might take a look at. And next week we start to get into the Mag 7. Wednesday we have Tesla, Microsoft, Meta. Wow, we're gonna have a week next week. So there's definitely gonna be some earnings plays that I'd be looking to trade, good or bad. Let's find out. So this will be big. I would say through Tuesday, Wednesday, Thursday, towards the end of the month, these will all be big. And you're throwing all this in with the FOMC on Wednesday and throwing this in with PCE on Friday. So for anybody that's in my double up service, hopefully we get some good levels on the SPY, good levels on the Qs, and some good levels on these individual stocks to take some trades next week. That'll be looking for some big gains. The final weekend of February, you get into semiconductors. We got XOM for oil. That's going to be on Friday. Keep a close eye on that one. Palantir is going to be Monday into the first part of February. Okay, I'll highlight Palantir. AMD, semiconductors, Google, PepsiCo, Pfizer, PayPal, Mondelez. All right, pretty good stocks there. Uber, I have a ratio spread on. Qualcomm. All right, yeah. I mean, it's as I expected. Like we're just a couple weeks into earning or to trading this year. We're getting into the heat up. The meat of earnings is coming in the next couple weeks. So next week being a big one. I would say you take your Tesla, Microsoft, Meta, Apple. That's a lot of market cap up for grabs next week. So, can we keep going higher? If these are all, really, really solid earnings reports, then yes, I could see the market just heading higher, melting up higher. If there's lackluster in any way, shape, or form, if there's like, I don't know if any transcripts are going to be cautious forward guidance. If they are, that might turn the sentiment a little bit sour. But if they're just like full speed ahead, we freaking love this new administration. This is going to be such a great time to be a business. Whatever. That's how the market can just euphorically keep running. I'm a little skeptical, like I said, I'm a little doubtful, but I will be watching. I've got some exposure on some of these stocks and, stuff to manage. So All right. Terrence joined Waterfall last night. Perfect, Terrence. We're sitting in some profit on the trades we took on Tuesday, and we'll take a look at those. Again, I'm assessing where we are at. Um, I mean, if we're creeping up to all-time highs, I'm probably going to do a few more trades like I did on Tuesday with the Waterfall trade. Waterfall Income Service, we are currently running a pretty nice win rate since the trade service started. 45 for 49. That's not too shabby with live trades. So we are 45 for 49 since inception. And the 4 losses that I did take were manual. I had one trade that was assigned that I'm repairing actually. And that repair is going to be from a $330 loss to a $700 net profit. So I'm basically getting a $1,000 flip on that in my favor. The other 3 trades that would be remaining were partial losses. I did manage some of the risk, took a couple $100 in total losses, and I've made thousands of dollars in winners. So that's really good, and I'm happy with it overall. I saw one person give a thumbs down to that post, and I'm like, I don't know why. I guess I need to win 100% to get a thumbs up. So anyway, that's a joke. Okay. So I wanted to take a look. I ran a scan. I wanted to talk through that a little bit. We've got some earnings that will be important for next week. That is a trade I looked at for this morning. Posted a trade there. Apple I was watching. Euro Swiss I skilled in some trades today, and I'm going to highlight this for next week. So I'm going to keep a close eye on this next week. Updated that. That was the Netflix play. And okay, we're good. All right, these are the stocks. So I'm just going to start from the top. I'm going to look at average volume. And let me go back into my screener. Let's see here. Average volume. So the scan that I ran, I'm looking for profitable price to earnings, positive earnings per share, positive institutional transactions, meaning that there's analysts calling for higher price targets. It's undervalued relative to current price. I'm looking for a forward PE ratio that is profitable, insider ownership in the high level where at least 30% of executives and insiders own shares in the company. A lot of it's based on their stock options, plans as executives and C level suite, the C suite managers. I want it to be optionable and shortable. I want the average volume to be over 1 million shares a day, and I want the target price. I want it to be the target price is above current price. So that helped me filter out 8,000 stocks down to 27, and alphabetically we can have a look here. But I want to see price wise, they're kind of all over the place. Most of them are U.S. stocks. Volume wise, let me see. Let's go. Oops. So heavy volume, Oracle had heavy volume. I think Oracle took a drop this week. Maybe it popped on some news. Holy fudge. Do we have earnings? Are you kidding me, dude? The TikTok ban. That's okay. Well, that's crazy volatile. Well, I don't really know what to do with that. I would say Oracle would have been a good trade down here with a like 1-1-1 a ratio spread. Son of a biscuit. Well, I didn't. Dang it! I should have been watching some Oracle. I don't think I have any. I do not. I have OXY. Oracle I traded last quarter, but it was done by the end of the year. Not really much to do on this one right now. I'm not chasing this thing. I will say though, if we go fundamentally, do we have some more upside? Checks a lot of boxes here. High level of debt, yes. All the corporate financing and refinancing and restructuring this year, all things that come due in 2025 could be another potential growth choke point in 2025. So look, we can have this little optimism window from like now until March or now until May, but I do think the market's going to face like a pretty harsh reality in 2025 that I don't know. I'm not saying recession, but I'm just saying like struggle to grow. And if inflation's not going away, we potentially enter into that stagflation phase, and that could be a big deal. Okay. So what else do we have? Price to earnings, price to sales, right in here. So it's a bit on the expensive side. Let's see what it is compared to its peers. So undervalued. Okay, we've got discounted cash flow fair market at 261. That's fine. I wish I didn't have this huge jump from 150 to 180. I feel like I'm certainly behind the move now. So question is, that's a lot of volatility. Is there anything I can do to say that, would I be comfortable, confident saying that Oracle will not go back below 150? I mean, technically speaking, this was pretty darn good. I should have freaking taken that trade. 154 was a nice little gap level, came right back to the 200 moving average, and man, what a good spot. So I missed it. I totally missed the trade. But if I could say, could I do anything right now at the 150 to 155 area? And the answer is probably yes. Let's see what the Ivy rank is. So I could go into ORCL. And let's look at, we've got earnings on the 10th. We've got March and April expirations. This one might not be too bad. I could say the 150 or the 155 by 150. That's not a bad play. Break even would be around 140, 144 and change, or 145 and change. If I go up one more strike, that's not a bad spot there for $135. If I did a 111, let me see what this one looks like. So I could do a 111, get a sign, take off $5, own it at 155.30, get roughly. Or I get rid of this one and get a little bit more income on the 155. I still get the $5 debit spread, so I could get $135 income, 88% chance of profit, just outside the expected move on the put side. About a 13, probably really 12 or 13% chance of assignment. If I did own Oracle here, all the way down to like 150-ish, let me see what that break even would be. So I'd take on assignment at 155, take away the $5 from the debit spread, and then take away the $1.35. I'd own shares at 148.65. So it's not an awful play. It's just a bit of an income play. I wouldn't mind owning shares of Oracle. I would certainly be in the repair camp if that's the case, because if I got assigned, I'd have to collar it. I'd have to look to get out of the trade for maybe $10 a share. I could do a lot of that with just a covered call. So would I consider this trade? Do I like this trade? I do. Enough for income, number one. Enough for potential ownership, number two. If I were to take the ownership price at 148, that would be a discount from current price all the way down to 148. I'd be looking at about a 19 to 20% discount off of current Oracle price. If we get to all-time highs, this is fine. I get about a 25% discount off recent highs. So, yeah, I like the trade. All right, I'm going to take this trade out to April, unless March is better. It's not better, but if it's comparable. So March, I get 91 cents. April, May, $1.92. Man, let me move this down a strike. $1.28. I move it down. I'd own it now around 140. 140. Is that right? Get assigned at 150. Minus 5, minus $1.31. I'd own it at 143. I'm going to take this trade. It's about the same credit. I'm just going to go out a little bit farther, get an ownership price that I'm happy with. This would be below the 152 low. This would be below the 200 moving average. This will also be a gap fill. So I'm going to take this trade here for May. It's a May 16th expiration. Buying the 155, selling the 150 with two puts at the 150. So it's a ratio spread. And I'm going to try to get a $1.30, $1.31 on this trade. Filled at $1.31. Okay, so Oracle is in. Let me add this to my tracker. Okay, ORCL. Uh, 5/16 expiration. That's a buy the 155 put, sell the 150 put, and collecting a $1.31 credit. Willing to own. Break-even price would be the 150 minus 5 minus 1.31, 143.69. Okay, that's the trade on Oracle. What kind of the buying power was it? On my portfolio margin account, it's not awful. Buying power is about $514 on my portfolio margin. On a standard margin account, it would be around $500. And on a cash account, it's going to be a little bit more than that, obviously. Cash account would be, let me get up here to my cash accounts. Here's one. About 14 to let's say $15,000. So I'm going to take this on a margin or portfolio margin account only. Yep. And I'm good with 100 shares. If I get 100 shares, I'll try to flip it for like $10 a share. Try to make $1,000. My goal, if I do that on, let's just say like my portfolio margin accounts, I have 4 out of my 11 are portfolio margin. If I did that on those accounts and I do that 100 times, that's 100 grand in this account. So if I've got 100 grand on a 440 account, so what's 100 out of 440? I make 22, 22, almost 23% on the year for just maybe playing trades that I don't have to take ownership of, but just being active and finding good opportunities with, profitable companies that are, I totally missed Oracle. I mean, no joke. Like it would have been a no-brainer trade down to the 200 moving average and take the same trade I just took, but going out of the way. Or I could have been a little bit more aggressive on the sell level because I thought maybe that bounces off the 200 moving average, but I probably would have moved it down a little bit towards like a 25 delta. Anyway, it doesn't matter. I'm in the trade right now. I'm going to add this in. So this is a May 16th expiration, 155 by 150 put ratio spread, $1.31 credit, willing to own, and the breaking will be 143.69. Okay. So that's the trade right there on Oracle. All right. So let me go back to the scanner. Oracle is top list with volume today. Dell is next, DELL. So we're trading at a 13.8 IV, which is awful. If I'm going to be selling premium, I don't want this stock. We're up to 100 and some dollars. With the IV that low, I mean, I could look at a ratio spread around 85. If I can generate any income, I have a feeling the expiration on this one, if I go out to like April or May, it's probably going to be terrible. I could go 90 by 85, get 56 cents credit. I mean, I'm not that interested in owning Dell. If I go to fundamentally, take a look at it. Okay. Negative shareholder equity, not great. High level of debt. That could be a problem later this year if inflation doesn't improve or the yields don't go down. Trading well below estimated values. Earnings forecast to grow. Earnings are growing. Trading. I mean, there's a lot of good boxes here for. We have a bit of a dividend play, which is fine. It's value. It's past performance. Financially, I wouldn't say it's the most healthy, probably because of the debt. And if they're restructuring debt this year, that could be problematic. Overall sentiment, I mean, 19 price to earnings isn't awful. Compared to current price, we're undervalued slightly compared to its peers. Dell is cheaper than, it's not quite as cheap as HP or Hewlett Packard price to earnings wise. Not awful. I wish I get a little bit more premium for this trade. If I like it enough, I could just do a cash secured put, to be honest. How much do I like it? Well, I like it enough to maybe say $85 for a cash secured put isn't terrible. So I could do $1.32, just do a cash secured put. If I define the risk, still get $1 on the trade, but reduce the buying power quite a bit. And I'd be willing to own. So this is out to May. Earnings are coming in February. If Dell is solid, I mean, I wouldn't imagine that the expected move is massive. But an 85 by 60 credit spread, I can do this for all of my accounts and also be willing to take on some shares. If I took on 100 shares at 85, I'd own the shares around $84. And I think I could repair this. 30 days out, you get like a $7 or $8 covered call. That's not bad. So yeah, within about 30 to 60 days, I think I could probably flip it for, $5 of income or better. So if I go out to May, an $85 put, which would be cash secured. So I wouldn't mind taking ownership. But if I put in a $60 buy, that brings me, it doesn't really cost me a lot. So it's $1.32, but buying power is $8,300. If I add in this wider spread, so I make it a 25 wide, I only require about $23.91 in buying power. The probability of this trade is about 90%. The assignment risk is about 9 to 10%, and I'm okay with that. So yeah, I think I'm gonna take this trade. So I'm gonna put it in as a credit spread though. I'm gonna go DELL, selling the 85, buying the 60, and that way I can put this in all of my accounts. So I'm gonna try to get a $1.06 and go through all these prices here. Let me see if this will fill. Maybe this will get lucky and fill for like $1.10. $1.25. I like that trade. Cool. I like that trade a lot. So let's go into all these accounts, and I'm going to put in an order at $1.25. Filling at $1.25. Okie dokie. $1.26. Not bad. 9732. Okay. I think that was this one that just got filled. 1, 2, 3, 4, 5, 6. 1, 2, 3, 4, 5, 6. Okay, so next account. All right. Right there. In. Okay. That is also in. DELL. May 16 expiration. Sell the 85 put. Buy the 60 put. And the debit on that, I'm going to see what the broker filled me at because it really didn't take much to buy that put. So if that changes over the next, I don't know. I mean, if it changes over the next 2 to 3 months before we have expiration at May 16th, I might actually take some profit on that put. Then I'd be exposed with a cash secured put or naked put. But if I could turn 73 cents into like $1.50 or $2, that would actually help lower my cost basis if I were to take any assignment on this trade, which is a little bit better than just having the put sitting there. So let me see what the broker filled me at. Let's check the final account that I traded. That one, DELL. The put was 13 cents. Wow, that's nothing. 13 cents. 13 cents. Okay, cool. Good to know. So that's a 13-cent debit. And I got filled for $1.25 credit. Willing to own, but a 90% prop. So POP, probability profit. All right. That's it. Dell. How about Walmart? I already have some shares of Walmart. I'll probably pass on this one. I own some shares around $91. It's 90.88 with a cover at 100 and a collar down to 80. So I sold the 100 call and I bought the 80 put. And if price goes up to 100, gets called away, I make about $9 a share, $9.12 a share. Where did you learn options? Well, I mean, I've been doing it for a long time. Part of it was, I followed Tasty Trade for probably over a decade. I've a lot of it's been time in the market. A lot of it's been, starting out simply with just using options in own positions to manage a portfolio. So to better, protect the downside, to generate some income. It started out as simple as like, if I want to own something, I do a Warren Buffett style cash secured put. If I want to get something called away or generate some income on an own position, I sell covered calls. It started there. But since like 2014, 2015, a lot more income trading, a lot less ownership, and a lot more creative with the strategies. So I think a good place to start if you're interested. I'm not just saying this to like shamelessly plug my own stuff, but I will say a great place to start if you're interested is I built an options course for $27. That is, if I were to teach anybody from scratch that has little to zero options experience, I would say this is a great place to start. So it's Vimeo. It's an on-demand Vimeo page that I have here for $27. If you are a lifetime member in any of my services, then I'll give you my full version of this. So there's a $27 starter course. There's a $500 full course. But if you're a lifetime member of my daily profit play or my waterfall income or my double up alerts, I give you a full like $500 voucher essentially and give you that course inside your classrooms. But if you want to just get started, $27 to basically say, okay, let's understand some options. Let's get some of these key terms and references. Let's get some of the intimidating language out of the way. And let's talk about actually applying it into the market. So if I want to be long an option, what does that look like from, how to find it, the best practices on buying options, whether you're in the money, out of the money, at the money, and then expirations and sweet spots and things like that. So, if you're directionally long and you want to trade long options, the most you can lose is what you pay for it. That's why so many traders start out buying options and they probably discover that they don't do very well, in all honesty. They've got to be extremely, extremely quick, nimble, manage quickly, have direction go your way, then you're fine. So if you get in and manage relatively aggressively, you can be long options and do pretty well. It's the home run option trades that usually don't do their thing. The reason why is because the markets are so balanced and so stable that market makers, they force you to pay for premiums that you're probably never going to cover directionally. So that being said, I don't love just buying options. There are times that I do it, and there's times I can make some really nice returns. But my favorite preference is to do the stuff that you see me doing right here. It's like I don't mind taking ownership, but I don't want like this like very finite window of like from now until next week or now until a month from now that I have to have price absolutely move in that window. I like a little bit more margin for error. I like a little bit more flexibility. And so if you want to learn how to trade spreads, bullish spreads, I can be directionally bullish on something and trade a debit spread or credit spread. That's what this video is for. If you want to be bearish on something, you can do this video, right? And if you like this, and this is a good way to wet your whistle for $27, then there's also my practical options full course, which is different price point, yes, but it's way more videos. We have 11 videos, 13 strategies, and we get into not just bullish, but also bearish, but also directionally neutral. So we get into butterfly spreads, broken wing, and standards. We get into calendar spreads, strangles, and iron condors. I also walk through the risk graph where you're looking at profit versus risk and probability, as well as navigating a bunch of different option chains. So anyway, it is what it is. I think that's a good place to start. And I do that because I have had that question a lot. And rather than saying like, oh, just go here, it's like, I'll do it. I mean, I'm happy teaching a lot of the traders that I teach. That way, when I'm running all my services and trading rooms, people are up to speed with kind of my style and my flow. That makes sense. So for Chris's question there, that's what I would say if you're interested. Here's a quick options one for 27 bucks. And here is the practical options full course for $497. And if you are in any of my individual services, double up alerts, daily profit play, waterfall income, these things I post on my Telegram channel and I have them available in my Discord. If you're a lifetime member in any of these services, I will give you the full practical options course included as a bonus for you as a lifetime member. Just food for thought. Okay. All right, cool. So Walmart, I'm going to pass in that one for my Scan XP. XP is XP Inc. We're trading at 1204. Investment banks and brokers. This thing is beat up like crazy. It is down 53% over the last year. That is awful. Technology-driven financial services platform. Let's see. Brazil. All right, let's just check this out. So XP. Is this an ADR? This is okay. This is Brazil. Let's see. Well, it looks like one of the best Brazil stocks you could possibly have. Earnings forecast to grow. I mean, that's cool. This thing is just an absolute discount. I still think there's defined risk in the trade. Would I want to own the shares? I mean, sure, but I'd probably I mean, I'd almost rather do something synthetically on this. Let me see something here. So we have it's in the financial space. Let's find it. XP Class A trading for 1203. I do have an option chain, which is nice. If I wanted to go out a lot farther, I could look at like a 1 or 2 year and kind of turn it into a diagonal spread, or I can do something synthetic on this. Let's see what the 2027 looks like. If I buy this for $3, what's my break even? If I buy this for $3 plus the 1140 debit, I'd have a break even of 1440. So that means if I went out sooner than that, so there's two ways I can trade this. One is I can buy a call, sell a put to create a synthetic long, and I can do that for the same duration. But then I'm exposed to the downside. This one, at least, if I wanted to buy shares right now, and I'll buy 100 shares, it costs me $1,200. So as long as I can get my debit to be less than that and also have upside, let me see what a break even of 1440. If I go out, let's say to we have earnings on the 25th. If I go out, let's say 60 days, can I sell something at the 1415 zone? That'd give me 30 cents. That'd take me down to 1410. I'd make $90 a share. All right. This also looks like a pretty wild debit. Oops. So if I bought the $3 call, sold the 15, I'm only paying 8. I mean, if this is right, if I can get in here for like 850 to 860, then that puts my break even. That'd be $3 plus 8.66, and I get it called away at $15. I mean, that's a pretty good return if this stock is above $15 by March 21st. But it's all dependent on what this debit is going to cost me. So I don't think it's going to cost me this little. If it does, that'd be freaking sweet, because that's a lot of upside potential for a stock that I'd only have to hold, or a synthetic play only hold for 60 days roughly. But now the question is, what am I willing to risk on it? So let me try to go 2 contracts, ties up a little bit more buying power. But I've got plenty of wiggle room here. I'm out to 2027. If this stock has anything promising the next couple of years, I'm basically eliminating a lot of the time premium and trying to get it called away near term. Okay. So let me see if I can get this thing filled. If I can get filled here for less than $9, I'm going to take this trade. So if I get filled for $9, that would be 3 plus 9. That's $12. Get it called away for 15. I make $300 for 200 shares. I make $600 in the next 58 days. And if it doesn't work, I'll just keep selling premium against it. I mean, we're at a point on this stock where it's like, could it get much lower than like $10, $11? I would say no. So I'm going to try to take this trade and get a reasonable fill. Let me see if I can take this trade for like 8.75. So that'd be buying the January 15th call at $3, selling against that a $15 call for March of this year, and try to get this trade for 8.75 or less. See if that will fill. Okay. 8.75 is not filling. I'm just going to go 10-cent increments and see where I can take this thing. Now I've got the debit around $10. Let me see if I can get filled for $9. Freaking sweet. I got filled for $9. I'm okay with that. All right, let me try. I'm going to put this on everyone's account. So let's go here, $9. Easy peasy. 9732. Getting filled a little bit less than that. That's fine. Okay. This one should be 072. Okay, 2 more accounts. There we go. And there we go. Okay, that trade is in. So that is XP. There's risk in the trade, right? It's not foolproof, but I went out to the 115 of 27 expiration, $3 long call, and I sold against that the 321.25 expiration, $15 sell call. My net debit was $9, and my break even is $12. Okay, so if it gets called away, $3 profit per contract, and then continue to lower cost if not called away. So this is essentially a longer term diagonal spread where I'm buying the deep in the money call, I'm selling against it. I know my break even. If I am correct on this trade with my break even at $12, get called away at 15, I make $3 on 200 shares. I make $600 and I do that on 11 accounts. So I'll make $6,600 if this trade works out. If it doesn't, I'll just keep selling basically, 20 delta calls, 15 delta calls. If price is going higher, I might move the strike price up a little bit. If it gets called away, it gets called away, but it's an income trade for me. All right. So right now, I'm pretty happy with the scan that I ran. That's why I posted it in Telegram. I'm going to keep working through this. We've got about 10 minutes left. App loving, I've heard about this one. AP is something the rank is crazy high. APP. Oops. So app loving. I don't really know what to do with this one. The IV is insane. I also wonder, I don't know when earnings are. We've got earnings in February. Son of a gun. All right, let me check this one out real quick. So volatile share price, high level of debt, insider selling, which I can imagine why, because this stock is up since, August of last year. The stock is up 490%. Why? I couldn't tell you. I don't really know what they do. I've just heard the name. Enhance marketing and monetization of their content in the U.S. and internationally. Let's see here. I don't know. It might be just ridiculous. It might be a lot of volatility. I'm probably just going to stay out of it. I was going to say the trade that I like right now would be, if the premium is decent enough, would be doing like an out of the money iron condor, right? So I could do like a 15 delta up here, 15 delta down here, and see if price stays in the middle over the next maybe 30 to 45 days. We do have earnings coming in February. So we're about 16 to 20 days away from earnings. If I went out to kind of my sweet spot around 50, 45 is what I like. I follow a tasty philosophy like that. If I went out 37 days or 58 days, it's okay. But the issue is if I'm 10 wide, this is current price in the center. I'm going to see what like a 15 delta looks like. So if I go 530 by 540, okay. And I go a 15 delta on the put side. Oh, cripes. Look at this thing. The call side is 15 delta calls are way the fudge up here, way outside the expected move, which is nuts. On the put side, though, 360 down to, it's like, really? So I can go way up here for the call premium and sell. But if I go to the 15 delta put, I get like nothing for it. That's a little concerning, but still outside the expected move. So I could get 290 credit. I'd be risking 715 on the trade. I'm 10 wide as far as the strikes go. If I get a little bit more income, now I'm 20. I don't want to really take on that much risk. So I'll go 10 wide. That's not a bad trade. And all I need for this price to do with an IV of this high at 94.9, if we just stayed within this range, is it possible that we don't go to 520? It's like, are you kidding me? Like 520 is way up here. Did I make 240 if I'm up to the, that's weird. 530 by 540. If I move this down, which is closer to price, I'm making less money. So I guess that might be my sweet spot there. 15 delta. This is a 11 delta, 260. So what's the discount? If price were to drop to 260, price would have to drop another 28% to the downside. If price goes up to like 530, it's way the fudge up here. We'd have to rip up like another 40% to the upside. So I'd say the upside is like, I'm not going to say impossible, but probably improbable. The downside is a little bit more realistic. That'd be where the defined risk is at. So if I take this trade, I'd probably want to manage this at 30 days or take partial profit. So I think I'm going to take this trade. I've got 765 risk on this thing. If I put it in, I'm going to go for like a 25% take profit. So 235. So I'd collect about $60, $70 a contract. If I go after the 50% take profit or manage it at the 30-day mark, we'll see what it does. But if price cooperates and doesn't do much, even through earnings, I mean, you never know. Earnings could be like nothing. Earnings could be everything. It could be crazy volatile. I have no idea. But the IV is pretty darn high. And, I'm as curious as anybody else. Let me see if I can move this down. I still get $2 on this trade, and I go out a little bit further. All right. Is this a stock that I'd be willing to own? That's a big question mark. Maybe, maybe not. We'll see. But right now, the probability of the profit is around 78%. As it stands, my threat of assignment would be about 9%. On the upside, same thing. Threat of assignment maybe 15%. But with this price skew, I can go way higher on the call side than I can on the put side, which I think is interesting for an $82 move. So I'm going to see if I can get this trade filled for $2. $2. Let's see if it'll take. So not filling for $2. Let me try $1.95. Try $1.90. This will be my final offer if it doesn't take it. Didn't fill at $1.90. Well, that sucks. All right, I'm going to cancel that trade. Let me go back to the mechanics here. Sell the 530, buy the 540, and try to go 260 by 250. So start at like the 11 delta. Now the debit's way different, or the credit's way different. Fudge, man. I don't know. That's pretty wide. I'm going to pass on the trade. I'll pass on that one. All right. Enterprise, CCC. So here's a look at the screener if you want to take a screenshot of this, or if you want to join my Telegram, it's in there. I just posted these 20 stocks, and I just went through and sorted by volume, and this is where I started. So I placed a trade on Oracle, I placed a trade on Dell, placed a trade on XP, and I'm just going to I'm not saying I'm going to take trades on all these, but if they look good, I'm going to place some trades on them. So I can continue this tomorrow. Right now, I am going to jump into a webinar that I start in 4 minutes. If you'd like to join me, you're more than welcome to. This is a service that I run called Weekly Windfalls. I just closed out trades today. We are currently sitting with a run since the service launched in September, 45 out of 49 winners, and a nice net gain on that, about a 92% strike rate, and continuing to run, looking solid on 2 trades we took this week, and we'll just let price do its thing. I'm probably going to stick with that type of strategy. If you're in that service, we talked about everything on Monday. And the trade I took on Tuesday, because the market was closed for MLK Day, the trade I took on Tuesday, I'm probably going to do more of those trades. So if you'd like to join me for that webinar, it is right here. And that is prosperitypub.com/weekly windfall. And I'm going to jump to that session at 4 p.m. So you're all welcome to join. Okay. All right. Sarah posted that. I'll be in there for a second. Cool. All right. Any other questions for today? If you are watching on YouTube, if you're watching for the Financial Wars channel, kindly click the thumbs up button, support that algorithm. If you're watching on my channel, youtube.com/Chris Pulver, same thing. Hit the like button. Comments are always welcome, and the engagement is always good. So if you're here with us live, if you're watching this live, even if you're watching the recording, but you get the live chat, post a comment, post a question. I see those things afterwards, or you can just leave me a comment when the video posts and shows a recording in the archive. But all the engagement is good, and the thumbs up button certainly helps. Just that little tiny button. If you like the content, like the channel, then let us know. Okay, I'll let you go for today. I'll be back mañana. If you want to jump into the 4 o'clock session, I will be there. That will be talking about waterfall income. And we have 2 trades posted from this week and more to come for next week. Cool. All right, thanks, everybody. I'll see you soon. Bye.